So many securities to trade, a new trader may be a bit lost about what to start with. Our guest today is Pratik Patel. He's here to talk about the grain market and why it's a good place to start. So Pratik, you like to trade the grain markets, and you suggest that it might be a good place even for a new person to start.
That's right. I mean, in the end of the day, you're trading. You want to make trading your career, make it a living. You want to go with what works best. You want to make trading your best friend, the market your best friend. One thing about trading, when I started off, you'd always hear about trading the index futures, currency futures, energies. That was hot and flashy. Everybody wanted to be that. You wanted to call yourself index trader. If you talk to your friends, I'm an index trader. If you talk to your friends, say you're a live cattle trader, they'll laugh at you thinking you're a rancher. But at the end of the day, you want to find something that you love, and you want to find something that's consistent. And I think a lot of people get caught up in the hype of trading index futures and currencies because of media. Any website you go to, any broker website you go to, they're going to give you day trade margins for S&P index, $500 or currency futures, and people get caught up into that and they want to trade that. But being an experienced trader, I find a lot of difficulty getting caught up in those high-paced markets, index futures. A lot of volume, that's for sure. But getting fills, getting in and out of the market quickly is going to be a little bit harder due to the thousands and millions of traders that you're trading with versus some of the other markets. They're very liquid, a lot of open interest, but they're not so caught up in the media. For example, corn and the grains. That's what I fell in love with and what I'll trade every single day is the corn market, soybean, and wheat. Good market, a lot of volume, a lot of movement, but you get the ease of fill, you get the stability, you get the trend-setting movements, and you also get less volatility. You're not going to have too much volatility step in and move your position all of a sudden in the blink of an eye. And I've seen that happen a lot when I used to trade oil and I trade the index futures. You can just turn away from the monitor and there goes oil up 10 cents in blink of an eye.
Now, corn this year has been a little bit more volatile. We've gone limit up or limit down in the markets a couple times. How do you react to that kind of movement?
Well, when you see the markets moving, since the markets are so transparent now, you get the bid and offers, you see the price movement. When you can kind of get that feel that market's going to go limit down, a lot of times I'll just step on the side and wait for another trading day. And those tend to happen around days before and after a report's released. Normally, the markets will be very consistent, move in a smaller range. Corn, for example, is one of the more steadier markets in the grain complex. On an average day, you'll have a daily range of about 10 to 15 points versus the soybean and the wheat market a little bit bigger. So being a new trader, you're going to be able to find that consistency in it because the daily range itself is a lot smaller and a lot controllable. And you see the 5-minute, 3-minute ranges are a lot smaller. So being a new trader, you're going to see how the markets move, how the bid and offers work, because they're moving in a tight spread versus them moving all of a sudden in the blink of an eye. This will enable you to understand the market and read it, and then you can take what you learn from that market and move on to the next market and use those same kind of skills that you've gained from the corn market.
All right, so it sounds like as a new trader, what I do need to be aware of, though, is when these announcements come out. Is there a place that you like to go to find these?
If you go to the CME Group website, they have the economic calendar, and you can see when the report's going to come out. And if you're trading the grains, you're going to read the reports. Okay, the inventory report's coming out, supply-demand report's coming out on day X, and you'll know when those reports are coming out, so you know what to look for in the market. When you're trading, you kind of got to understand that we're coming into a report. Markets might be a little erratic. Let me take a hands-off approach and just observe the market, let the report come out, and get back into the market because there's always going to be ample amount of days to trade and trading opportunities, so never feel like you're missing anything when trading.
The Chicago Mercantile Exchange is the best place to get it because that's where the futures are coming from.
Exactly, that's right. And just go to their website. They have an abundance of information on their website, anything from specifics of the contract for corn, the options, economic data coming out, so that's your best place to get any kind of information. They also have a lot of educational resources for new traders. They have brochures, they have like pamphlets on the corn market, the oil market, and they'll give you all the information. One thing I'd recommend is read it. Spend time, hour a day, read that information, understand it. The more you observe, the better it's going to make you as a trader, and you'll be able to understand, like, okay, I read this is going to happen, whatnot. So it's always, educate yourself before you get into any market.
Pratik, thanks for your time.
Thank you.
You're watching the MoneyShow.com video network.